All right, welcome to this new section. In this section, we're going to be talking all about liabilities. We're going to actually dive a little bit deeper in liabilities than what you've already know from other sections. In this section, we're going to look at specific instances of liabilities and how do we calculate them, as well as how do we report them on our financial statement. So if you're ready, let's talk a little bit about the different types of liabilities that we have at our disposal. So just a review of liabilities. Now, these are debts owed to another party. Usually they are outside parties. So these are external organizations that we owe money to or services to or product to, that is typically satisfied with providing a service, cash, or other assets. So when we think about liabilities, oftentimes we think about we owing money to someone else. But in the business world, it's a little bit more than that. It could be that we owe money to someone else. It could also be that someone has prepaid for services or product, and we will need to pay them in the form of a service or product. So we're not necessarily paying in cash. So that is also how we can extinguish a liability. So not all liabilities are extinguished with cash in a business setting. Now, some of the classifications that we have for liabilities. So on the balance sheet, we can classify liabilities into two time periods. The first one is current liabilities, and the second one is long-term liabilities. So we've got current and long-term on our balance sheet. Kind of reviewing what we already know. So current liabilities are short-term obligations that are due within 1 year or the operating cycle of the company, whichever is longer. And so we've talked about what the operating cycle looks like. So for most companies, the operating cycle is within 1 year. But there are certain companies in which their operating cycle is more than 1 year. And in those cases, we will use whatever it takes for them to complete the operating cycle, which might be 18 months, 24 months, even a little bit longer for a lot of construction companies. So again, whichever is longer, that's what we're going to use. But for most companies, it's within 1 year. Then everything else that doesn't fit that bill is considered long-term liabilities. So these are long-term portions of obligations not due within 1 year or the operating cycle of a company. So when we have these liabilities, we can segregate them into current or non-current liabilities or long-term liabilities from our definition here. Now, there are many types of liabilities, but these are the ones that we're specifically going to be talking about in this section. The first one are accounts payables, which you should be familiar with already. The second one we're going to look at is accrued liabilities. We talked about that when we did adjusting entries. And then finally, we're going to be looking at notes payable. So we're going to be looking at those types. Now, we might call them a little bit different. So that's what we're going to see here in a couple other lessons, but those are what we're going to stick to in our lessons in this section. So accounts payables, these are obligations related to goods or services provided to the company. Accrued liabilities are related to expenses that have been incurred but has not been paid yet. So we accrue the liabilities, we accrue what we owe, but we haven't paid for it yet. And the last one here is a formal, is notes payable, which are formal obligations to another company. So those are the three types of liabilities that we are going to be looking at in this section. Now, one of the key things about liabilities is how do we value them in our books? Well, liabilities should be reported at the amount that the creditor would accept to settle the liability. So this is kind of like accounts receivable and the net realizable value theory. And so what we're saying here is that we're going to report liabilities at what we expect to have to pay or give up that would satisfy the creditor. And the reason why we're doing that is we want to make sure that we're providing on our financial statement what we are obligated to pay. And so if it is not expected for us to pay the full amount, then we should put that on our books. And we'll talk more about that later on when we get to like cash discounts. If we always take cash discounts, or if we always pay within the discount period for cash discounts, then we should report the amount that we are actually going to pay, not what we owe if we didn't make the cash discount. So that's what we're saying here. We want to value all of our liabilities at what the creditors would accept to settle the liabilities in full. Now, additional things that you should think about is that companies should increase the liabilities whenever additional obligations occur. So obviously, if we take on more debt, we should increase our liabilities as they are incurred. And the reason why we're making a statement here on that is because generally we have this liability initially and that's what we book, but then we start to accrue other liabilities, we should add that as well. So interest payable would be an example of a notes payable, and then we incur more liabilities because we're borrowing money and we book an interest payable to offset that. So that's what we want to do, is when we incur additional liabilities, we want to book those on our books as well. Some reduction of liabilities. So when do we reduce liabilities? Companies should decrease liabilities when they have satisfied the payment, either through making a payment or providing a service or product to the creditor. So if we provide the service and we no longer owe it, then we should reduce our books by that amount of the reduction that creditor is accepting for our services, our product, or our cash. So that is an overview of the different types of liabilities. And like I said, as we go through this section, we've got a lot of different topics that we're going to be talking about surrounding liabilities. So hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or clicking the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.